So here we go, Hims and Hers. We're going to take a look at the stock, we're going to take a look at the earnings, and we're going to talk about it. First of all, some opening statements I really want to make on this video. After today, well, maybe you could argue the case before, but today, in my opinion, Hims and Hers is the best valued growth stock on the market right now. And that is saying something. After the run that it's been on, to still say it's the best undervalued growth stock on the market right now, pretty big statement. After the earnings today, in my opinion, I am the most confident I have ever been on Hims and Hers. Now, you guys know me. I've been a shareholder since 2022. I was probably one of the first ever YouTuber to kind of talk about this on the stock market scene. And it's good to see. I'm a little bit worried today because I don't know if this video is going to do that well because there's so many of the big YouTubers talking about this one now. I think we had the Feraldi's, the big Brian's talking about it. So it shows you where Hims and Hers is now. But I think I was the first person to cover this. I've been in the stock for 3 years. I've never been so optimistic about a stock. Never been so optimistic. Today, I am a buyer of a stock. So even though I was a buyer of a stock when it was $4, I am actively buying the stock today. And I am more confident than ever that we'll actually see Hims and Hers come over $100 stock in the next 2 years. Those are some pretty big statements, aren't they, when you've been through it like how I have with this stock all the way down at $4. And I never thought I'd see the day where I would be talking about Hims and Hers about an unbelievable drop today. Hims and Hers is down 21% today, and I have generally no idea why. Because the earnings that they've just brought out were 10 out of 10 earnings. Fantastic. Arguably the best in the company's history. And the fact that the stock is down 21% today is bonkers. It shouldn't have happened. I think you could argue today the stock could have easily been up 21% today. That is a big disconnect. In my opinion, and like I said, I've covered this stock through many brutal times when the stock was down at $4. The big disconnect right now between the share price and the valuation is bonkers. Absolutely bonkers. And I'm going to go through with you today so you can see this. I never thought we'd get close to a period of time like that 2022 stock market crash where Hims would be unbelievably undervalued. I'm not saying we're there yet, but we are very, very close. And I didn't think we would ever get to the point where we were even slightly close. But the fact that we are is scary. Now, I got to say, a couple of points. It did make me laugh to see the amount of people that were out there bashing Hims and Hers today. I am very surprised. I wasn't aware until I went on X today and I saw people people mentioning about Hims and Hers being down 21% and go, I told you it would go down. It's a trash stock, or it's just piggybacking off other people's products. I couldn't believe to see the negativity and maybe even the short sellers that are on this stock, and that's maybe where the issue lies at the moment. I think that me, and I think most of you guys watching this video, are long-term investors. I've already been a shareholder in this company for like the last 3 years. I can see myself easily holding this stock for another 5 years yet. So for us, I think we're caught up in a battle where I think maybe there's a couple of meme investors, ex-investors, shall we call them, just piggybacking because the stock's absolutely skyrocketing. And as well as that, I think there's also a few people that I think this could be an easy short to do because of how quick it's gone up. The type of investors that are in there, we can short these guys quite easily and flush them out of the stock. I think that's also the issue that we have at the moment, is that there's a lot of day traders and meme investors in the stock at the moment, and us long-term investors are kind of just caught up on it. So when this kind of situation happens, just step back. Step back and look at the share price. Year to date, we're still up 60%. You know, this stock in the last few days has fallen, what's it fallen down? 41%. But yet we're still up 60% year to date. Zoom out even more. We're still up 292% year to date. But this is the thing, is that I actually look at this stock today and I go, well, actually, now that this drop has dropped so much, now that this stock has dropped 41% in the last 2 weeks, we went from a stock that was maybe slightly getting to overvalued territories in a 2 week period. Not even a 2 week period, a 1 week period. We're actually now undervalued, in my opinion, which is scary. And I would even argue the case that this is the most undervalued growth stock on the stock market right now. So let's just have some look at some numbers here, because I wanted to talk, that's the point I wanted to open up with on the video, but let's actually get stuck onto these earnings. So revenue up 69% year to date. 69%. in my opinion, I thought this was going to be a year of slowdown. I thought revenue was going to go into the 40 range. We're up to 69% year over year. That's insane. That's absolutely insane. You've got to take a minute there just to look at that growth. This is not only a growth stock, not a growth stock of 20, 30%. This is insane growth. And this is all while being majorly profitable and seeing the profit margins expansion as well. Net income of 126 million, just EBIT of 177 million. Subscribers of 2.2 million. I mean, these subscribers just keep growing and growing and growing, and we've got some crazy forecasts to look at them subscribers in a second. 45% up year to date. Full year guide 2025, full year range of 2025 of 2.3 billion to 2.4 billion. Now, analysts are starting to catch up with their estimates, I've noticed today. So if we look at the full year of 2025, you see some of them are starting to get higher up. It's not too far away. Yesterday, before the guidance came out, because obviously analysts are now playing the catch-up game as they normally have done with this stock, the estimates were 2 billion. So even with what we'll talk about in a little bit with the concerns of, the weight loss is growing, this is just a weight loss drug, and now that's gone, the guidance is going to collapse. Even though they know now that this is going, Hims and Hers have even been confident enough to put out that growth number. That's absolutely insane. To go from what analysts were expecting of 2 billion up to, let's call it, I think it'll be at the higher end of the guidance, 2.4 billion. To hike up your revenue guidance by 20% when you're supposed to be only a piggyback company and that piggyback ends in February is insane. I have never ever seen a business do this. Never seen it. That is fantastic guidance hike up. And that alone, this guidance alone from here should have been why the stock was up. You should not be hiking your revenue guidance up by 20% and then your stock falls 21%. It shouldn't happen. It shouldn't happen, especially when you look at the valuation, what Hims and Hers is, which we'll look at in a second, So, a couple of notes here. Revenue excluding GLP-1. Remember, this is all being called a piggyback of a GLP-1 company. Excluding GLP-1 offering, they increased 43% year over year. So even without all this GLP-1 at the moment, this company is still growing 43%. Not bad, Not bad for a company that's supposed to be a GLP-1. If you take that completely out, this company is still growing absolutely rapid. Absolutely rapid. And I think people keep forgetting that. Just look at this here. So revenue, major increase. We've talked about that before. Gross margins of 77%. I saw a few people shouting out that, the gross margins were down. And we'll talk about that actually in a little bit in a second. I don't want to go onto that just yet because I've got a later slide for that. But that's what I saw a few people claiming to be the reason why it was down. That was a load of rubbish, and I'll point that out for you in a second. Net income as well, major increase. There was a tax benefit there as well for 24, so just be careful of that. EBITDA up to 54 million from 20 million, as you can see here. Free cash flow up from is 59.5 million, up from 10.8 million from the prior year. That's just absolutely insane. That's what we're getting right now. Is it the scale of profitability? Hims and Hers is scaling up, and we're seeing the profit margins coming in mega, which is great to see. We talked about the guidance. What I would say is that they're expecting 11 to 12% in the first quarter of 2025 and 12 to 13% in the full year of 2025. I don't know if I've got this slide up here. I was going to do that later on, actually. So, yeah, it's here. So, if you actually look, they actually got to a 12% adjusted EBITDA margin already in Q4. So the fact that they're only guiding for 12% in the first quarter won't happen because the scale of efficiency will lead them up. I think at the start of the last year, they were at 8% at the start of the year, and then obviously they finished at 12%. And if you look at 2025, they're expecting 12 to 13%, 30% on the high side. They're going to scale up more than just 1% on the EBITDA guidance. It's going to be another 3 or 4% on their EBITDA margins they're going to scale up to. So realistically, this end of year is actually going to it's at least going to finish at 14%, but I think it's probably going to get to 15%. So even on the EBITDA margin, there's major rooms for scale as they scale up with this revenue growth going forward. The cash, look at the cash pile going up now. This gives them the ability, and I don't even think I've got a slide on this today, which shows you how good this was. But the the new blood testing company that they've bought as well, that opens up another industry for them to go into. This is coming such a big company where they're going to offer so many offerings. And because it's so cash generative now, they can make these little acquisitions to boost the launch into these new categories. It allows them to do share buybacks. Look at that cash balance, so much naturally going up as well. One thing I didn't like is the stock-based compensation. There was a big increase on it, but like I said, they are doing share buybacks, so it does neutralize it a little bit. And to be fair, with how well the management team have executed, as a shareholder, I actually want them to get rewarded, so I'm actually okay with a little bit of stock-based compensation. I don't want to get diluted too much, and that's why they got the share buyback going on. But hey, if you want the best in the business, you got to pay them. So I'm fine with that overall, but just something to kind of point out there. As we look at the company here, obviously we talked about the growth, 56 to 63% revenue growth. By the way, the latest analyst numbers are now starting coming through for 2026. And analysts are expecting the revenue to only go up by 12% and the EPS to only go up, what is that, around about 10% as well? Look at these 2026 numbers. Now, this is a scary thing. They've got so much room. I thought 2025, these were going to be the thing I was worried about is the guide, because they already had really strong numbers and maybe analysts are, baking in quite a lot of GLP-1. But the fact that Hims and Hers have actually come out now and said, even with the GLP-1, we're going to be so way, now coming out the numbers, we're going to be so far ahead of that. I really like that. But what I'm also liking at the moment is some of these numbers that the analysts are coming out with 2026. These are easy comps now for Hims and Hers to beat. They're going to start getting scaled up going forward. And obviously, if we do hit that 63% growth, that's going to be absolutely insane. Obviously, we talked about the EBITDA margins. I think they're going to beat them as well. Key thing, weight loss revenue of at least 725 million. So even with the GLP-1 going out, which was excluded from the guidance, they're still going to make 725 million. Like, I think people are worried like this weight loss category is just going to suffer because GLP-1's going to go. Even with it going, from the other products they offer in this weight loss category, they still think they can get 725 million. And by the way, that weight loss category, it seems like people think this is the whole business still. Like, if you look at that there, it's what, 30% of the business right now? It's, so the weight loss business is still going to do very well in 2025. And even if you're concerned that that's the whole business now, it's not even 30% of the business. So I don't even see why there's such a big fear around that if that is going to go out of the way. Now, they put the guide out here for 2030, EBITDA margins to 20 to 30%. Obviously, from where they're at right now, that's obviously over a double up from, where if we take the midpoint of around about 12%, that's nearly double up of profitability in the next 5 years. That's what we talk about. Even management is saying, look, we're going to scale up our levels of profitability as we grow. 20-30% profit margins. EBITDA margins. Profit margin wise, that's going to be that's so far ahead from where I was forecasting. And as we saw before, we saw them hit the 2025 guidance a year early. So this is 2030 numbers. So where they're going to hit 2030 numbers, 2029, 2028, really good. So during the conference call, Andrew Dunham tried to spend a lot of time trying to get people to understand GLP-1. I think that a few people are thinking that the GLP-1, Hims and Hers can't sell anymore. Now, obviously, they can't sell it directly because obviously it's taken off the short list, but Hims and Hers have the alternatives that are coming through. So what's going to happen is the GLP-1, the commercially available semaglutide, obviously Hims will not be able to sell that anymore going forward from February. But what they have is the other options. So they've got the oral-based solutions, which is tablets, which some people will prefer to have. It is cheaper. That's going to be coming into some people's minds, that I can go get a cheaper product. Some people thinking, I don't want to do the injections. So that will help them. And even though it's not as effective, they are still going to have some form of offering on the platform. The other thing is personalized semaglutide. So the thing with this is that what Hims are going to do to get around it is there's a lot of side effects with the commercially available one. Now, because of the side effects, what Hims do is they're able to do other alternatives like the dosage or maybe add a couple of things into the semaglutide that help with the side effects. So, for example, one of the big, some of the side effects here can be feeling sick, not being able to sleep, some of those side effects. What Hims can do is go, you know what, we can personalize your dosage so you lose some of those side effects. And Hims say that, a lot of the people that come to them are actually people that have tried it from other platforms and they go, I got this side effect, which there's a lot of side effects. And then they are trying to personalize it and they try and, help them with those kind of side effects. Now, that is the way to get around currently the ruling, because if you're able to offer a product or the same product with not as many side effects, you are allowed to, a bit of a grey area, but you are allowed to sell it. So what's going to happen in February is that everyone that's kind of on this, they're going to go, you used to have it, didn't you? But you had side effects. You know, say you've got this issue here, and we're going to personalize it for you. And by the way, we can also do it cheaper for you. So what's ultimately going to happen is Hims are still pretty much going to sell this through the personalized option. It's still going to do pretty well for them. And then the other thing is they've also got the, I can't remember exactly the way that you say this, is it liraglutide, which is a similar medication to semaglutide. I think the difference between that is that it has to be injected daily rather than weekly. I also believe it's slightly less effective, but as well as that, I believe it is cheaper. So there's also going to be that option there. So the way people saying like, oh, now that that's over for Hims and Hers, Hims aren't going to make any money. That's just not true, because Hims and Hers are still going to be offering the oral-based solutions. They are also going to be offering the personalized semaglutide dosing. And they're also going to be offering the liraglutide that's going to come off patent by, is it Q1 it's off? So there's still these free weight loss options, and that's why the Hims and Hers still saying we're still going to make this money from this at the moment, because they still have these free options in the platform. So everyone that's concerned about this issue of this weight loss, you should be more bullish than ever, because what is happening now is the thing that we always knew that was going to go has gone. These three things are going to probably remain with the platform for forever. The platform is still generating good growth even without the weight loss. The bull case on Hims and Hers right now should be bigger than ever. The thing that we knew was going to go has gone, but yet Hims is still going, okay, we know that's gone. We've not included any of it in our guide, and even without that there, our growth is just absolutely insane for the next few quarters, or for the rest of the year, to be fair. And it's when you look at the other things that have going on at the moment as well, like they mentioned on the conference call, like men and women's dermatology grew 55 and 100% year over year respectively. Like this is the thing with Hims and Hers, is that it's coming the Uber, the PayPal of, you know, healthcare. Healthcare has not been disrupted yet, but Hims and Hers is disrupting the healthcare. They are giving the alternative where you can come to this platform and get these products for cheaper prices, and you get it all in one place. You get to come to this platform and you don't have to pay the crazy fees that other platforms are offering. They give you the personalized solutions and they give it for cheaper. They give you the alternative products that are a lot cheaper. They give you the option of where you can have all this done and also get all your other healthcare products done while you're on there. This is the thing, is that I don't think people are realizing this with Hims and Hers. It is coming. It is going to come, the major healthcare provider in the UK for a cheap alternative. You know, we saw this in the, you know what, I think I've got a slide somewhere about this actually, to be fair. So the opening remarks from Andrew Dunham was, "We believe that Americans deserve transparency about the system and their options, and we will continue to passionately push back against any attempts to confuse, scare customers about whether compounding can be done legally and safely." This is the Super Bowl advert. This is what Andrew Dunham said. Like, Hims and Hers is disrupting the space, and the big players don't like it. They don't like that Hims is going, we can do it better than what they do, and we can do it cheaper for you. We can give you all these products for cheap. We can get all these things in one platform for you and make it convenient and cheap. The big players don't like this, because the big players for so many years have kind of been fleecing a lot of Americans, making it sound tricky. And Hims and Hers have come along and said, you know what? You can have it all in one place, cheap and affordable, and it's all in one platform. You know, this big thing is that they keep adding all these other healthcare things onto it. Like, you know, you got the blood testing that's going to come on now. Hims and Hers is the disruptor in the healthcare space that we haven't had. We've had all these disruptions, you know, SoFi in the banking space, PayPal, Block, Uber in the travel space. We've had all these kind of disruptions in sectors, but we've not had one in the healthcare, and that's the biggest TAM of them all. And that's going on right now with the healthcare at the moment. Now, like I said, a lot of the shorts push back on the gross margins. We knew this was going to happen. If anybody read the Q3 earnings, they said that the Q4 earnings is going to have some sort of pullback on the gross margins, because they want to take advantage of some marketing schemes, and also the investment into scaling in GLP-1s. That's going to push down the gross margins. Well, as we're seeing at the moment, they're getting the revenue and the profit and the customers for it, and they're getting the rewards for it. we don't mind a little bit of sacrificing those gross margins a little bit if it's going to help bring in more revenue and profit that's going to generate more financials in the future. What I've said all the time before, it frustrates me when companies get punished because they're making short-term sacrifices for greater financials in the long term, and that's what exactly is going to happen. And they actually said that we are going to then start seeing improvement going forward, because what they did is as they scale up the marketing, for example, because they did it in the first quarter with well, they did it in December, but also as well with the Super Bowl advert. Look at the benefits they're getting from that Super Bowl adverts. You know, when they did the Super Bowl advert, it's just more awareness now. Hims and Hers is saying like they're getting so many more people coming to them naturally because people are more aware of it now. People are talking about it. You saw the explosion in the App Store. You probably have seen some of the web data by the amount of people that go into the platform now. Hims and Hers was like, you know, Big Pharma was trying to keep them down here, but the problem is Hims and Hers is spreading now. It's coming the go-to platform for the healthcare. So as this happens and they're getting the rewards from like the Super Bowl adverts, we're going to see that in the financials. That's why the financial guide has been so good, what we got yesterday as well. Andrew Dunham as well also got asked when he thinks that Hims and Hers will get to 10 million subscribers. And he thought that Hims and Hers will get to 10 million subscribers in the next 5 or 6 years. Now, the thing is 10 million subscribers is a pretty, decent amount. If we look at what the platform is at right now, it's around about 2.2 million. So that's like a 4x kind of, in 4 to 5x of the current subscriber base. Now, if they do 4 to 5x in the subscriber base, and he thinks that they can achieve it in the next kind of 4 or 5 years, the thing is that, lazy maths would tell you that that's more than likely going to be a 4 to 5x revenue in the profit, and probably even higher than the profit as they scale up, 4 to 5x in the revenue. Now that's way ahead of even what I've got in my financial guide. I've got nearly a treble, maybe treble of the revenue right now. So right now, if that is actually Andrew Dunham's serious answer of what they can do, that's actually scary good. And that's why I'm also, and even 10 million as well, to be fair, when you look at it, it's not really a big population in the world. It's not a big population of the US. There's so much TAM for them to still go to at the moment. So that was also a really exciting answer that was on the conference call. And also, this is what it talks about. The more they keep adding these personalized treatments and they add more and more onto the platform, it's the go-to place. It's the go-to place where all these Americans that have been fleeced for the healthcare for so many years are able to go get healthcare for cheap, and it's all on one platform. And people say, all the time. I think I was watching another YouTuber the other day, and I don't know if it was, I feel like it was Daniel Pronk I was watching, and someone in the comment section said, well, what's Hims' moat? And I thought, well, there isn't really a moat as such. There's not really a moat where you can say this company does this and nobody else can do it. And it's really hard to define a moat on a business. What is it that this company does that makes it so special? But I always think like you can always make a moat sound very easy. Like you look at Amazon and go, what moat has Amazon got? Well, it's just an internet business that sells things. You can make another website that sells things, and it's quite easy to copy. But why did Amazon come the number one player? Because they did it the best. It's because they had the first mover advantage. You can argue the case. Okay, now they've got Amazon Web Services. Now they've got Amazon Delivery. But anyone could have done it. There's so many of those kind of businesses. Google's just a search engine. Someone can make a search engine and it'd be popular, okay? But why was it there? Why has it been dominant player? Why did Ash Jeeves not succeed? Well, the reason why is because Google did it first and they did it the best. And if you do it the first and you do it the best and you kind of get up there, it's very hard to disrupt that once you've done it. Once your company has that first mover advantage and you do it the best, it's very hard for it to be taken off, right? So if Hims and Hers comes the first ever healthcare platform that has it all in one place, driven by AI, with all these products offered in one place, why would there be another platform that is able to take that? If Hims and Hers have scaled it up, everybody's on it, why is everybody, once that comes a household name, why are people going to leave Hims and Hers when they've already got the affordable platform? This company's already scaled up. You're not going to go to another alternative and go, oh, well, they're slightly cheaper, I can save $10 to $20 a month. Yeah, but on that platform there, they only do 2 of the 4 of your healthcare needs. So you're still going to come to Hims and Hers. it's going to be the convenience of it all, because it's the platform that is scaled and ready to go and built up, and people trust it and people use it. Hims and Hers, for me, is set to be a major healthcare company. Like, we could generally see Hims and Hers coming, it's already a multi-billion, but a major big company out there. And it's exciting. Now, looking at some numbers here, wanted to just give you some updated numbers to kind of finish the video off. I put 35% revenue growth in. I could easily see these numbers being beaten, but I don't want to go too crazy. Now, I used to have, I think it was 5, 10, 15%, maybe not even that, profit margins. I've actually hiked up the profit margins now because they're already kind of at the low side. So we'll see if they can get up to the 16% profit margins. And looking at these numbers, yeah, not much on the low side. Mid-side, nearly 90% upside. And on the high side, nearly 200% upside. Now, the big thing is when I'm running these numbers, I'm running at 20 times multiple. Which, if you're doing these numbers, there's no way you're going to be at 20 times multiple. I think Hims and Hers, realistically, I mean, let's go 40. I normally don't want to go too frothy, but I am going to go 40. I think you could argue the case that you could even go higher than this, maybe 60. But I'm going to go 40. And realistically, I think they'll be at these kind of numbers here. And look at those numbers there. And by the way, like I said, when I talked about the subscriber numbers, I said that I assume like a triple of that revenue. As you can see here, if we look at Andrew Dunham's subscriber numbers, and also the average volume of that order goes up as well, you're talking more than a triple of the revenue, by the way. So I think that this could even be conservative slightly. But look at these numbers here from the price here. You're getting a stock with 280% upside on the mid side, up to nearly 500% still on the high side, which is just absolutely insane. And this is also something, while I'm here, I nearly forgot this point, but I'm going to mention it to you. And I'm looking at the moment, so it says that Hims and Hers today is 75 times earnings after this drop. I'm looking at all the kind of future metrics of this company. So, for example, it says that it's 104 times forward PE. Now, I'm looking at the moment, and analysts are going to be playing catch up a little bit at the moment to what numbers they're going to do. But I think on the EPS side of it for 2025, we're expected to go from, we have started to go up, because yesterday this was 1.04. So, yeah, it's funny, isn't it? The stock sold off today 20%, but all the analysts are upgrading the numbers. It went from 1.0, I'm going to do a tweet about this later. So it went from 1.04 on an EPS forecast, and today they've hiked it up to 1.15, right? So $1.15. So if I'm looking at the share price today, the stock is currently, I had my numbers worked out from yesterday and I've not got my calculator out, so I apologise. But $39, right? $39 divided by $1.15 of EPS, right? We are below 40 times earnings, right? And obviously, Hims and Hers normally beat EPS as well. So you're talking what? You're somewhere around 35 times forward earnings, right? So you're getting this growth company growing at these sort of levels at 35 forward times earnings. I have no idea why every single company, every single website out there is like saying it's a forward P of like 104 times forward earnings. Like, I'm seeing this everywhere. Why are all these kind of big websites out here giving incorrect, even the trailing P at the moment, 116 times, right? That's not true. That's not the right number. And look at the forward P of 104 times earnings. I just showed you there, like, realistically, the forward P right now is like 30, 40 times earnings. I don't understand why all the big companies out there are kind of giving the wrong metric out there. And that's why I say it's good value. Because, like, if this company realistically right now is, 30-something times forward earnings, you should not be picking a company that is at 30-something forward times earnings that's about to do 53% year-over-year growth. And by the way, like, that's not actually even what they're going to do. If we go back to the guidance, what they suggested they're going to do, I mean, I would say that they're probably going to come at this high side. So at the high side, 63% year-over-year revenue growth. You should not be picking a company growing at 63% year-over-year growth down at 30-ish times forward earnings. That's a no-no. That doesn't happen. It should be not this value. And this is what I got to say. Like, these numbers today, for me, make me look at Hims and Hers and say this is in the best position it's ever been at. I am the most confident I've ever been on Hims and Hers. I think Hims and Hers will go over to over $100 in the next 2 years. And those financials were probably the best I've ever seen them do. And like I said, today I have no idea why the stock is down 22%. I argue the case that this stock should have been up 22% today. The share price today should not have happened. And I don't know if this is just a consequence of the day traders that we're currently in, or the the shorts currently on the stock. But if you missed out on this stock and you've been staring there like, oh, I'm gutted I missed Hims and Hers. Oh, I accidentally sold my whole position. Now I missed out. You wanted an opportunity to buy it? That's what I'm saying. That's all I'm going to say. Anyway, this video was a long one. I need to go get a drink. 35 minutes long. 9 o'clock on a Tuesday. Already done a B&M video. Don't say I don't do anything for you guys, eh? If you do want to say thank you, patrons in the description, guys. £6 a month. Support the YouTube channel. Helps me make these videos at 9 o'clock at night after already making a video and being at work all day as well. Thanks for watching, guys. See you in a bit.